from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, market meltdown. Stocks sink, yields surge. Investors getting jittery about whether the Fed can fight inflation without plunging the economy into recession. Plus, AMD getting caught in the sell-off after surging post-earnings. We're going to talk to AMD CEO Lisa Su about how she is still driving massive growth amidst 40-year inflation, lockdowns in China, and an ongoing chip crisis. And Uber shares down now multiple days in a row despite releasing earnings early to avoid Lyft's market wipeout. Our conversation with Uber CEO Dara Khosrowshahi later this hour, why he's confident about demand and consumers on the road ahead. We will get to all of that in a moment, but first a look at the market. Stocks plunge with bonds in a violent reversal from Wednesday. The Fed's decision to raise rates initially boosted markets, but tech stocks have since had one of their sharpest U-turns ever. Bloomberg's Ed Ludlow here to break it all down. Ed.
Yeah, you're completely right, Emily. And the long list of superlatives, right? The NASDAQ 100, very tech-heavy index, having its worst day since September 2020. NYSE Fang Plus Index, mega caps, the US-listed shares of Chinese tech cos, having its worst day since September 2020. And you look on that screen, US 10-year yield, the benchmark 10-year Treasury with a yield above 3%, for the first time since November 2018. That's just a snapshot in time. That's just Thursday's session. It's a complete U-turn, as you say, reversal from what we saw on Wednesday following that Fed decision to raise rates by 50 basis points and the commentary from Fed Powell around that. In fact, you look at the NASDAQ 100 over the course of 2 days, right? If we bring that up on the screen and just think about the overnight change in psychology. We went to bed Wednesday night thinking the Fed's got this. 50 basis points in line for the next few meetings, no discussion of a 75 basis point hike. The Fed has this. They can fight inflation without bringing us into recession. We wake up and it's a complete different story. We're worried about stagflation. We're worried about the Fed doing enough to combat what we're seeing with the inflation picture. But also there was a lot of fighting talk from Powell, right, Emily? He's talking about the strength of the economy, the tight labor market. And then we have earnings season, corporate America, hearing some really positive noises. Hard to get my head around.
Indeed. And, you know, there were a number of former Fed officials who didn't agree that this was enough and that this would be plunging the economy into a recession. I spoke with Uber CEO Dara Khosrowshahi earlier today about their earnings results. We've seen their stock slide now multiple days in a row, despite a different picture from Lyft. Take a listen to his reaction.
We're focused on what we can control. Can we build a great service? And can we ride the reopening, both in terms of gross bookings growth, profit growth, ultimately free cash flow growth? And the answer, based on our results and based on what we see going forward, is a resounding yes.
Ed, what do you make of that?
Yeah, well, look, the share performance speaks for itself. You know, they gave a pretty bullish outlook. The demand is coming, you know, and it echoed what Lyft was saying, and yet they had their worst two-day drop on Uber stock since March. They were kind of caught up in the contagion with Lyft. There's no hiding place here, right? Let's look at the mega caps and how some of the biggest names in the world of technology performed on Thursday. Some of the worst performers on the NASDAQ 100. I had to look twice on my Bloomberg, but this was the worst day for Apple and Microsoft since October of 2020. You know, they're not just sensitive to what we're seeing with higher rates, rising yields, but there's also now a discussion about, well, what's going on with supply chains globally and the situation with China lockdowns. You got a pretty good guest coming up next who has a strong view on that indeed. Strong indeed. Ed, thank you. Well, it was a nightmare on Elm Street day for the NASDAQ. That's how my next guest is framing today's sell-off. Dan Ives, Managing Director of Redbush Securities, joins me now. So, Dan, what's your take on just how bad this nightmare is going to get and how long it's going to last?
I mean, look, today, if you look at, I'll call you the declines relative to the advances over 90%. I mean, just to sell off, I view it almost, we're nearing some sort of capitulation stage. I mean, my conversations with tech investors were so negative today, it's almost bullish. And I think I just continue to point to, this is just a white knuckle period post-Fed that I believe we're going to look back and some of these quality tech is way oversold. if you're willing to hold it through this roller coaster.
Why is it hitting tech harder than other sectors?
I think it's a few things. I think first off, you're seeing a deleveraging, degrossing across the board, and obviously a lot of institutions really levered to tech. I think the other thing is that a lot of these high multiple names, and even ones that are not even expensive names like Apple, Microsoft, in my opinion, you're just seeing right now the street being like, okay, I don't believe numbers into the next year. What am I going to pay? I'm totally uncertain. I'm just going to sell these names. And I can just tell you, covering tech 22 years, the only time I've seen times like this in 08, 09, and even going back to the early days of COVID. So I think we're starting to get to that panic stage. And then it's like Ed talked about. You look at earnings season, it's a have and have nots, but enterprise, cloud, cybersecurity, strong. Semis, as obviously Lisa Su will talk about, strong. So, of course, other side, hugely weak, e-commerce and other names. But I think we are starting to get to what I view as in this horror show opportunities.
We saw Lyft lose a third of its market value yesterday, and another gem from you. You called their spending guidance a 1980s rock star-like disaster. Uber shares also getting caught up in that here, despite a very different outlook. What do you make of that?
Look, I think if you look at Lyft, something just doesn't connect in terms of that conference call, which I'd probably say is probably one of the top 3 worst conference calls I've heard in 20 plus years of doing this. And I think part of it is just they couldn't explain why they're spending. The driver shortage is there, but even as Uber talked about, it's not where it was 6 months ago, even 9 months ago. So spending so far ahead of this, it was a head scratcher. And, when I look at what Uber's doing, I think that obviously in sympathy, because these stocks trade almost Starsky and Hutch. They're almost combined in terms of how they trade in tandem. I think Uber's way oversold Lyft, clearly in the investor penalty box, and need to prove themselves. But I think this was just way too aggressive spending that I'd be surprised if they ultimately spend that when it's all said and done.
In other news, I want to ask you about this long list of unusual names that have joined Elon Musk in his deal for Twitter. Larry Ellison, who's, of course, on the Tesla board, Andreessen Horowitz, Sequoia, the Qatar Investment Authority, and Binance. What do you make of how this is coming together?
Look, I think in this poker game, Musk obviously got Twitter, and then ultimately it was about the financing component to ultimately undo a bit of his burden in terms of leveraging his Tesla stock, both in the debt and the equity. Look, this is a who's who in terms of who he got, from both coasts and even globally. Ellison, obviously, a huge confidant of his, not a shock. But you go through, from Andreessen to Sequoia to Fidelity and others, I think it also just shows Musk is not just doing this alone. He's going to have a team strategically, even though, in theory, he could be temporary CEO. I think over time he moves to more of a chairman role. And I think that's something that even on an overreaction today, his golden child continues to be Tesla.
All right. Dan Ives, Wedbush, as always, appreciate you joining us and your metaphors. Coming up, how chip makers are faring amidst the extended sell-off. We're going to be talking with AMD CEO Lisa Su about their bullish forecast and outlook on supply catching up to demand. That's next. This is Bloomberg. After surging post-earnings to its best day in months, AMD also getting pulled into the sell-off. The chip maker posting more than $5 billion for the quarter and raising its full-year forecast. I want to bring in AMD CEO Lisa Su now to talk more about her outlook. Lisa, thank you as always for joining us. Look, we're seeing the highest inflation in 40 years, lockdowns in China, which is a huge production hub for the chip industry, and a major ongoing war. How is it that you are managing to post 71% growth and raising your full-year forecast?
Well, first of all, Emily, it's great to be here with you as always. And as you said, there are a lot of things that are going on a lot of disturbances around the world. But, for us, it's really about focusing on our long-term strategy, delivering for our customers and our partners, ensuring that we're getting new products coming out. And, we have a great strategy. We have a very, very strong product portfolio for this year. And we're excited about the growth that we saw both in the first quarter and then more importantly, what we see going forward. It's a really great time to be in the high performance computing market, and this is where our focus is. So yeah, we're very happy with the growth that we're seeing.
Big tech is underwater. AMD got caught up in the sell-off today. What are you preparing for in terms of how you plan to navigate a very uncertain macro environment?
Well, Emily, I think the important thing is for us to focus on, the big picture. I mean, AMD today is such a different company than we were even just a few years ago. We completed our acquisition of Xilinx, which has, a set of markets that are a diverse set of markets. And then when you add that to our data center strategy and the progress that we've made in the data center, I think, what we're really doing is trying to navigate. Yes, there are a set of macro issues and also geographic issues that we're dealing with, but fundamentally people need more high performance processors and more technology, and that's what we do. And so it is very much about having a long-term strategy, a very diversified set of markets, and ensuring that we're focused on execution every single day to deliver to our customers.
So the biggest problem in the chip industry has continued to be supply not matching up with demand, and you made a decision to outsource to TSMC, which has been widely credited for some of AMD's recent success. When you look ahead, do you see being able to have enough supply to support all this growth, all of this demand that you're seeing?
Well, I have to say, Emily, we've been working on, sort of ramping up supply for the last 18 months. I think, even pre-pandemic, we knew that our strategy meant that we would grow, very substantially over the next few years. We've been working with our partners, not just on the wafer side, of course, on the wafer side, but also on, the back end side, substrate capacity, back end capacity, all the components that you need. And yes, we've been able to bring on a significant amount of capacity, and that's what helped us grow, so much here last year, as well as this first quarter. And for the rest of the year, we're forecasting 60% annual growth. So we are bringing on a lot of capacity, and it is something that is very strategic for us, not just this year, but into 2023 and beyond.
The data center has been a huge success story for you. How much of this demand is coming from big cloud providers like AWS and Microsoft versus increasing demand from other companies building out their own data centers?
Yeah, so the data center has been our big strategic bet, Emily, over the last few years. And we've done extremely well with the largest hyperscalers. 10 of the largest hyperscalers are using AMD in very significant way, both on internal workloads as well as their external facing workloads. We're also making a lot of progress with enterprise customers and customers who are looking at building out a hybrid environment. So, we grew, we basically doubled in the first quarter in the overall data center, but we doubled in each of cloud and enterprise. And what you're seeing there is there's just a demand for more computing. When you think about digital transformation, business transformation, all of the AI that's out there. So there's continues to be very high demand in the data center.
Now, there's been speculation about the PC market and whether it's hit a pandemic peak. Intel CEO Pat Gelsinger, very bullish on this. Are you as bullish? Where do you think the PC market is really headed?
Sure. So, Emily, in the context, the PC market had its best year, really last year. I mean, it was a very strong year for PCs, as there was a lot of need for updated PCs and updated infrastructure as we were in the middle of the pandemic. When you look at this year, we are taking a little bit more conservative view of the PC market. We believe that it'll probably be down, let's call it high single digits. But even with that, we're talking about a market that's going to be over 300 million units this year. So my view of the PC market, it's about which segments that you're in. Certainly some of the low end and some of the more consumer facing areas of the PC market have taken a little bit of a soft spot here in the first half of the year. I will say, though, if you think about commercial PCs, people are investing a lot in IT still because they want the productivity. If you look at high-end premium PCs as well as gaming PCs, there's actually good demand for those. So I view the PC market as a very good market, but one where we do have to watch some of the volatility that is in there.
Okay. Now, I have to ask about your reaction to the Supreme Court's leaked draft opinion, which shows that Roe versus Wade could very well be overturned and soon. AMD has a good portion of its workforce in Texas where, more aggressive anti-abortion legislation has already been passed. You've got companies like Salesforce that have offered to pay for their employees to leave Texas if they want to. How are you thinking about all of this as a business leader?
Well, Emily, look, we're certainly watching the developments very closely. I don't want to get ahead of the actual ruling. I think there's still some clarity to be brought. But our priority is always going to be first and foremost with our employees and ensuring the health and safety of our employees. So we're certainly watching the situation very carefully, and we'll make sure that we're focused on our employees.
AMD CEO Lisa Su, thank you as always for taking the time to join us. Thank you. Good to see you again. All right, coming up, he helped unionize the first Amazon warehouse in the United States. Christian Smalls joins us next from Washington, fresh off his meeting with President Biden. He's next. This is Bloomberg. Amazon labor union president Christian Smalls testifying before members of Congress today about his efforts to unionize workers across Amazon. He, along with other union leaders, also just met at the White House with President Biden, Vice President Harris, and Labor Secretary Marty Walsh. He helped workers at an Amazon facility on Staten Island become the first in the country to unionize. However, Monday, a nearby Amazon facility voted against unionization. He joins us now live from Washington. Chris, great to have you back here on the show. You tweeted that you met the president earlier today and that he told you you got him into trouble. Tell me a little bit about that meeting and what you think he meant by that.
Yeah, I believe when he came out a couple weeks ago and said Amazon was coming for you, I think he just overstepped it a little bit, and he was advised he shouldn't have. But it was great to see that he still recognizes that we have to have some regulations with the company as far as unionizing.
So you also spoke with President Harris, Vice President Harris, Labor Secretary Marty Walsh. Did they indicate if they're planning to get more actively involved in your efforts?
Yes,
How
absolutely.
So?
We had a great conversation. They spoke to not just myself, but other leaders and organizers in other industries like Starbucks and REI. And what else? The artistic industry as well. We had librarian there as well. I want to give recognition to all of them. And we definitely think that there's going to be some more support coming from the political realm. I know that they mentioned that they have implemented some things in their administration that they're willing to roll out over the next couple of months. And that's going to help us out on the ground, and I'm excited to be a part of that conversation.
Now, you testified before a Senate committee today, and I have a portion of that testimony. This is your response to a question from Senator Lindsey Graham.
That's the reason why I'm here, to represent the workers who make these companies go. And I think that it's in your best interest to realize that it's not a left or a right thing. It's not a Democrat or a Republican thing. It's a workers' thing. It's a workers' issue. And we're the ones that are suffering.
What's your sense of whether the senators you were speaking to today understood that in a Congress that is often so divided by partisanship?
Yeah, I just had to reiterate that. I wanted to make them understand that, our voices matter. The corporations get to have the first say in everything. They get to control everything, whether it's the market, whether it's the laws, lobbying, whether it's even the government in some aspect. We don't have a say at the bottom as workers. The only way we have a say and a voice is when we collectively come together. And when we collectively say we want a union, that right should be given to us. And that's what I want to make sure that message was clear cut, that the workers are the ones who generate the revenue for these corporations. And I think he got the message because he didn't last long. He left halfway through, but I understand. This is something that has to be said. It has to be spoken about.
Now, you won at one of the Staten Island warehouses. The union won. Amazon, though, is appealing that decision. They said they were disappointed with the outcome of the election there. They believe having a direct relationship with the company, employees having a direct relationship with the company, is best for the employees. You lost at a warehouse across the street, and I'm curious where you plan to do this next, given that clearly it's not necessarily a done deal.
Yeah, we're prepared on our side to go to the court hearing and hear out the evidence if there is some, and we will take our actions from there. Definitely talking to our legal representation on our side to get the best advice as far as our first election. But at the same time, Amazon should recognize the fact that the Amazon workers at that facility voted for the union, in favor of the union. Over 500 workers, over 500 ballots were the difference. And as far as the second election, we definitely overshot it a little bit. We took on a huge task. We've been campaigning for quite a while, over a year. We had a new facility, new workers, new organizers in that building, and they just didn't have enough time to convince enough of their coworkers, which is understandable. So for us, we just have to reassess and get back to work and get back to organizing.
So are we going to see you filing union petitions outside Staten Island soon? And if so, where? Quickly.
Well, I could tell you we're going nationwide. Every building in the country has contacted us already, and we're going to continue with that plan to get everybody in the country set up.
You're saying every Amazon warehouse in the country has contacted you about the prospect of unionizing?
Every Amazon facility in the country, and then some, has contacted the Amazon Labor Union, and we will have a conference that will address everybody nationwide.
All right. Christian Smalls, president of the Amazon Labor Union, fresh off his meeting with President Biden. Thank you, Chris, for joining us.
Thank you. Absolutely.
Coming up, are we headed for a booming summer, or will inflation spoil the party? We'll be speaking to Peter Kern, Expedia Group Vice Chair and CEO, about the travel trends he sees ahead. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get back to the markets and volatility in stocks spreading to crypto too. Our Ed Ludlow been taking a look there. Ed, what do you see?
Yeah, just another long list of superlatives. For Bitcoin, this was the single biggest intraday drop since January. And again, it's a two-day story, right? A violent U-turn, because we saw Bitcoin push towards $40,000 per token following that Fed decision to raise rates by 50 basis points, the commentary from Fed Chair Jay Powell, and then we just drop off and we're down back towards $36,000 per token. In this higher rate environment, Bitcoin's traded in a very narrow range. It's struggled to break out of that range. We've never really got back to the highs that we had at the start of the year, and we saw other altcoins like Solana, for example, selling off during, and Ether as well, during the session on Thursday. Earnings season continues though, and there are some after hours movers that I want to look at. Lucid, reaffirming its guidance to build between 12,000 and 14,000 vehicles this year, but it's raising prices because supply chain issues are ongoing. The stock trading water in after hours. Zillow, really interesting. Big sell-off in Zillow, down 9.5%. Tepid outlook, and the worry here is that higher rates, the Fed, impacts mortgage rates, and that could impact or cool off the housing market. And look, Block M, we haven't spoken about Block in a while, right? Formerly known as Square, up 10% in after hours. They're talking about strength in their traditional payments processing business. And very quickly, during the session Thursday, there were just two stocks on the NASDAQ 100 in the green. One of them, Booking Holdings, up 3.3%. Earnings, bullish outlook, a summer of travel's coming, Emily. But just a few days ago, Expedia said exactly the same thing. They're down 6.7% on Thursday, Em. A lot of narrative with Expedia, recession fears might hit them. A lot of love for Booking. Not really sure what's going on there.
All right, well, I got someone who might have an opinion about that, Ed. Thank you. As Ed said, Expedia shares tumbling since their earnings report earlier this week. This is rising inflation and a potential recession looms over the summer travel season ahead. Joining me now, Peter Kern, Vice Chair and CEO of the Expedia Group, to talk about that and more. So look, Peter, you saw the chart. What's your reaction to that?
Yeah, I mean, we weren't expecting it. I think people are overreacting to some of the inflation worries, some of the other travel players and concerns, but we haven't seen any of the inflation worries affecting the booking so far going into the summer season and longer stays. So we were a little surprised. We thought it was a good quarter, and I think we expect a continued good travel season despite inflation concerns.
So there's no question that people want to travel again, but at what point does inflation sap that demand?
Yeah, I think what we saw through COVID that, on a macro basis was a lot of savings in most households and also an overspend in consumer goods. And what we've expected to see and what we've been starting to see is a sort of a fallback to norms and probably an overspend on services, including travel and hospitality. So we've been expecting that, and that seems to be playing out. Obviously, long term, who knows on inflation, but in the near term, inflation worries don't seem to be canceling people's ambition to travel, whether they might maybe re-rate down what they're hoping to do, maybe not Paris, but San Diego, we might see some of that. But again, we expect people to travel regardless. And, we participate in all segments of travel. And if people travel a little more modestly, we'll pick that up. So we expect it to be strong, at least for the foreseeable future.
So you saw a steep rise in bookings compared to last year, but you're still not back to 2019 levels. I spoke to Airbnb CEO Brian Chesky just yesterday. Somehow he always comes on the day before you, so I have to get your reaction to it. He talked about how they are now ahead of pre-pandemic levels, even in cities. Take a listen to what he had to say.
Well, it's already above 2019 at this very moment with Airbnb. I can't say it's above for everyone. I don't know if hotels are back to 2019 levels, but we are.
Next time, Peter, you're going to have to come on 24 hours before Brian Chesky. But either way, look, what's your reaction? How do you explain some of the differences that we're seeing?
Sure. Well, a couple things. One is, we saw very robust growth in our alternative accommodation in Vrbo during COVID, as did Airbnb in segments. And as cities have come back for them more, cities aren't fully back, but cities have done better in the last quarter. And so they're getting the benefit of that. Vrbo, for us, doesn't really participate in urban markets. So we've both been strong throughout COVID. And I think the extra lift of cities coming back put them into positive territory. But what Brian referred to, which is true, hotels are not fully back across the globe. Not all geographies are back across the globe. So our mix of business, which, we have markets like in North America where we are fully back and more. And we have markets like APAC that are still way under where they've been because they're still largely closed down. So it's a mix of business, and that's what the story's been really throughout most of COVID, which is depending on where you were strong, if you were in a strong place and the business was there because of COVID, you did well. And as COVID unravels and we start to see cities come back, long haul international come back, all the corridors open geographically, that business will be back. We are definitely back and more than back in many markets.
You've got some other news today, unveiling your Expedia Group open world e-commerce platform. What is this and how is it going to augment the broader business?
Yeah, so as you know, we've talked before about how we've been replatforming our technology to drive our own B2C business faster. But what we realized in doing that was that if we built our platform to be externalizable, essentially in microservices, that we could provide the underpinnings for travel commerce for really any players. We have a very robust B2B business. We power lots of airlines selling rental cars or packages. We power rewards programs. We power AARP's travel program, many things, but these are big enterprise level deals. What we're building now is an ability to sort of take our whole stack and turn it into microservices. So if a partner just wants to use our service capabilities or our payment capabilities or any parts of our e-commerce stack or the whole thing, or sell cars or just activities or anything to augment their business, we can provide that capability, so that we think it's going to dramatically expand the number of partners we can have in our B2B universe, which ultimately expands how much travel we can sell for our partners and how many travelers we can serve.
All right. Peter Kern, Vice Chair and CEO of the Expedia Group. Always good to have your view of the future here on the show, Peter. Thank you.
Thanks, Emily. Good.
Coming up, Bitcoin plunging the most since January. What's going on there? We'll have all the details next. This is Bloomberg. Let's get to our crypto report now, with Bitcoin dropping the most since January. This as the market rout deepens amidst concerns about a recession. Bloomberg's Katie Greifeld here for more. Katie, take it away.
Well, Emily, first I want to start big and just walk through what a horrible day in markets this was. If you look at the S&P 500, the biggest stock benchmark in the world, it was down 3.6% today. Somehow that's only the worst day in a week. A lot of that pain came in tech stocks. So the NASDAQ 100, that was its worst day since September 2020. A lot of that selling came in the biotech sector. I saw a great stat today that if you look at that sector, a fifth of it is worth less than the cash it holds. But a lot of that pain came in those speculative tech areas. You're looking at the ARK Innovation ETF down 8.9%. That's after it saw its biggest inflow in about a year earlier this week. That's got to hurt. But yeah, a lot of the action was in Bitcoin, the world's largest cryptocurrency, down 8.4% today. If you zoom out and look over, a 5-day period, it's down 8.6%. So a lot of that pain just came today. And again, but if you go back to the stock market, really, really painful. Consumer discretionary, a lot of selling in that sector, a lot of selling in the e-commerce names in particular. I'm thinking about Amazon, I'm thinking about eBay, and Tesla, of course, also selling off in a big way with that tech sell-off.
So it wasn't just Bitcoin, to be clear. Just how broad-based was this sell-off?
It was pretty remarkable, Emily. Really, this space, the whole cryptocurrency ecosystem, it tends to move as one, but most of the losses came in Bitcoin, which I thought was interesting. If you compare that to Ethereum, for example, that's the second largest cryptocurrency. It was only down 6.4%, only being a relative term there. So yeah, Bitcoin, sort of the underperformer among the big coins. But if you broaden out and look at some of the altcoins, I'm thinking about Avalanche, I'm thinking about Solana, those were down as much as 15% at one point at the worst of it. And again, this is all as we talk about the Fed, the macro environment, liquidity coming out of that the system. What does that mean for cryptocurrencies? And it seems so far it's not too good.
And, let's talk a little bit about some of the companies that have made Bitcoin crypto a part of their business in ways large and small. How did this impact them?
Well, I mean, we got to go straight to MicroStrategy for that, right? I mean, what was interesting about the earnings report, obviously Bitcoin, they took a hit on their Bitcoin holdings. We know that Bitcoin has had a rough couple of months, but what was really interesting was on the earnings call, you heard MicroStrategy CFO line out that if Bitcoin falls to $21,000 per coin, MicroStrategy would face a margin call at that point and probably have to sell some of their Bitcoin holdings. Of course, Bitcoin, it's not close to there yet. It's still hovering around $36,000 a coin. But if this trend continues, and the trend has been lower, we could get there conceivably.
All right, lots to watch ahead. Bloomberg's Katie Greifeld, thank you for that update. Coming up, Uber shares continuing to slide. Uber CEO Dara Khosrowshahi addresses the market meltdown and what he sees for drivers and riders on the road ahead. He's next. This is Bloomberg. to get back to the markets in a minute, but earlier I spoke with Uber CEO Dara Khosrowshahi. He asked for his reaction to Uber shares taking a leg down even after releasing earnings early to avoid comparisons to Lyft. Take a listen.
I think the reaction to Lyft was significantly more negative than Uber. So maybe we're not in the same boat, but it definitely affected us. And I do think we're just in completely different places. You know, you see with Uber is the benefit of scale, the benefit of globalization, the benefit of diversification, and the benefit of discipline in these markets. You know, we are by far the number one player in the US, have been for some period of time. So when earners look to come back to the marketplace and start earning in a flexible way, they're coming to Uber first. And that's a real advantage. When they come to Uber, they're busy all the time, not only driving people around, but also delivering or shopping, et cetera. The opportunities to earn on the platform are greater than ever. And in a reopening scenario, a lot of advantage comes to the number one player, and the number two player, in this case, Lyft, may be having a hard time. From a globalization standpoint, everyone knows that the reopening outside of the US has happened much faster. So we have been dealing with reopening dynamics, bringing drivers back onto the platform. We made big investments last year for some period of time. We've been used to this. We built muscles to do it, and we're much more diversified so that we can, lean into the West Coast, which is reopening fast, while, the East Coast has lots of profitability, UK, all over the world, we have lots of profits to pull from so that we can lean into reopenings, but we're not too dependent on one place. We're just a very different global player. And then from a diversification standpoint, we've had delivery be a very, very big part of our business. And as with reopening, delivery growth rates, while they're healthy, 15%, they're not growing quite as fast. So we're able to take couriers who used to be drivers. A bunch of our couriers used to be drivers. They're not driving people because of safety concerns. Now that COVID safety concerns are largely behind us, we can bring them back to drive, or we can hire, or we can bring earners onto the platform, both to deliver things and to drive people. We just have a very fundamental business advantage over any monoline player out there.
So you're saying when drivers come back, they're going to come back to Uber first. And you did say you don't plan to significantly increase incentive investments to get those drivers back. Lyft is planning to increase those investments. And I talked to John Zimmer, the president of Lyft, about why. Take a listen to what he had to say.
I'm not concerned. And in fact, the message we're saying is that we see the demand coming back, and therefore we want to invest in supply.
So this is part of the reason their stock went off a cliff. Are you saying you won't have to increase incentives and that this won't lead to a subsidy war? Because that's what we've seen in the past.
We have already invested in incentives. Remember, Europe opened up last year. Latin America has already opened. So we have been through this exercise before last year. Lyft is a year behind us in some aspects as far as a reopening goes. So we're very, very confident in terms of demand coming back. We're very confident in terms of supply. Remember, we have a structural advantage in that we can bring on couriers, which are easier to bring on. We can upsell them into driving because the earnings opportunities now are very, very significant. And as a result of this fundamental structural advantage, we're confident not only in top line growth, but also in margins. Remember, we guided Lyft, I think their numbers went from 75 million in EBITDA to 50, and they guided 10 to 20. During that same period, we've gone from 86 million to 168 million to 240 to 270 million. So we've been headed in opposite directions for some period of time. And I think based on what we heard from them, we're headed up. We're headed into free cash flow territory.
You did report a massive loss, $5.9 billion, in part tied to your other investments, Aurora, Didi, Grab. Are you reassessing your strategy at all here?
We're not reassessing our strategy. Those investments were part of mergers and acquisitions, different activities. And I think we made the right moves, as you can see, based on the operating results that we're displaying, which are absolutely industry leading. We're going to take a careful look at those equity stakes. We have plenty of liquidity. We're moving towards free cash flow profitability. So we will look to monetize those stakes and return capital one way or the other to our shareholders over a period of time. But we're caught in the same downdraft that everybody else is caught in right now.
Uber CEO Dara Khosrowshahi there. You can catch that full interview at Bloomberg.com. I want to get back to today's market meltdown and bring in Robert Cantwell, Up Holdings portfolio manager. Robert, just how many companies are going to get caught in this downdraft and how long does it last?
Emily, it's been pretty ugly, but we are almost at the end of earnings season here. And your team has done a great job of reporting a lot of the bad numbers out there. E-commerce has had its first negative quarter year over year and just about as far back as most folks can remember. Even in the first half of 2020, e-commerce was still up over the last year. And that has a lot of repercussions to other industries, software, ride sharing, advertising. But with these sell-offs, to be frank, we think there's something bigger going on here. And we think investors are reevaluating whether or not these are actually technology companies with limitless scale and low operating costs. Well, you have Netflix is now being valued like a cable station. Other investors are looking at Facebook's, Meta's capital intensity and saying, does their future look more like AT&T's than it does Google? And you've seen multiples re-rate faster than we've seen in a really long time across these assets because investors now, in our opinion, they've likely moved too far in that direction. But we've got to do our jobs and parse through it and find the good deals here.
Meantime, you've had a flood of retail investors coming into this market over the last couple of years, thanks to companies like Robinhood. What happens to them?
Well, a lot of them might not exist. You saw something very similar in the late 90s internet boom. If you remember the explosion of the E-Trades and the Ameritrades, and a lot of those businesses ultimately had to merge to stay alive. Some went out of business, some went private. And this Twitter deal very well could be the first big transaction that we're seeing, but far from the last. So we expect a lot of consolidation. We expect some shutdowns. We expect the IPO window to remain pretty darn shut. So we don't think over the next 12 months, you're more likely to see a shrink in the total number of companies available for investment than you are to see new companies available for investment.
Where do you expect to see consolidation? Who do you expect to see shut down?
Well, the worse the business model, the more likely the consolidation. So you've had a lot of the ride-sharing folks on here in the last 24 hours. That space is just desperate for continued consolidation. Just Eat Takeaway and DoorDash have been big consolidators. Uber's tried to be, now they're divesting. So we think that space is just going to continually have to do deals amongst itself until they get to a small enough number of players to be profitable. What's
so
more
are you saying like Uber should buy Lyft?
I mean, have you ever seen two businesses more in need of a merger? But the ride-sharing space is really challenging because they're competing for the same thing ultimately, which is they thought these. I was in San Francisco with you for the last 10 years while these businesses were quickly being built up, and they were parading themselves as these complicated, fast-growing software platforms, and they were treating humans like commodities. And if we've learned anything over the past few years here, humans are actually a very precious input cost into the functioning of these businesses. And those business models are more dependent on humans than just about any business you've seen come out of Silicon Valley in the last decade. And that is a really competitive place to be. And it's a really hard place for investors to sit around and be patient for them to find ways of scaling those business models.
So how long does this drag out? How long are we in the red here?
Well, Amazon told us that starting on May 15th, growth rates relative to last year would start to look better and better. And we tend to believe them. If you remember last year, the first half was incredibly strong. The fastest growth you've seen in the US in the last 50 years. The second half, totally different story. One of the worst holiday seasons that the US has experienced in 20 years. So the comps relative to last year are going to keep improving. That likely, investors tend to have existential crises when growth rates are slowing down and management teams are surprised at how poorly their businesses are performing. But it's going to get a lot easier as the year goes on. And it's very possible that as you see some of these growth rates start to stabilize relative to last year's numbers, you might see some of these multiples come back to more middling ranges.
Well, that sounds like somewhat of a silver lining. Up Holdings portfolio manager Robert Cantwell, thanks for giving it to us straight. Appreciate it. That does it for this edition of Bloomberg Technology. We're going to continue to follow the sell-off right here on the show and on Bloomberg Television over the next 24 hours. And guess who's coming on tomorrow? DoorDash CEO Tony Xu. We'll ask him if consolidation is in the future. And don't forget to check out our podcast anywhere you get your podcasts.